Good afternoon, traders. Here's a quick rundown of the key macro updates across the US, Japan, oil, and gold markets. So starting with the US, the dollar remains weak following the soft economic data. While the Fed is expected to hold rates steady this week, investors are watching for any hawkish signals. A dovish tone could keep the dollar in pressure, but geopolitical risk may offer support. The Fed is still expected to begin rate cuts in December, with 2 more next year. Inflation may peak near 3.4%, GDP growth could slow to 1.25%, and unemployment rate is seen rising to 4.4% by the end of this year. Tariffs and inflation remains the key concerns. Next, Bank of Japan. The BoJ held rates at 0.5% and will taper bond purchase more slowly than expected, starting in April next year. Markets have priced this in, keeping the dollar-yen below 145. However, JGB yields ticked up as investors were disappointed by the lack of immediate tapering. Focus now shifts to Japan's Ministry of Finance and potential bond supply adjustment. So next, crude oil. The crude volatility is rising fast, with the OVX hitting a 3-year high. Traders are worried not just about the short-term supply risk, but potential for broader regional instability if the Israel-Iran conflict escalates. While Saudi and UAE's spare capacity offer some cushion, any hit to Iran's export facilities or the Strait of Hormuz could send oil sharply higher. And Trump's claims of US control over Iran's airspace has added a new layer of uncertainty. Lastly, gold. Gold held steady despite weak US retail sales as traders await the Fed's decision and monitor Middle East tensions. The 3,500 level remains a key target, with 3,300 acting as a near-term support. Fiscal concerns in the US, including proposed tax cuts and widening deficits, continue to support gold's longer-term bullish case. So in conclusion, the markets remain on edge amid the geopolitical tensions and shifting central banks' expectations. Traders should stay alert for policy signals and headlines that could shift sentiment quickly. Thanks for tuning in, and I will see you in the next update.